Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Let's take a look at how things settled on Wall Street last night. And we've got some green on the screen. So perhaps a bit of a bounce back as we kick things off for the latest session. And that's seeing a bit of a jump on the S&P 500, up 0.7% to 6,345. We've got the Dow Jones Industrial Average also higher, just slightly by 0.2%. And the Nasdaq Composite was the outperformer, rising 1.2%. And one of the stocks on the move, Apple, and that's on the back of some tariff-related news. We'll dive into all that with Frank Cappelleri. He is the founder and president of CappThesis. Frank, good morning. Thanks for joining us on the show today.
Hi, Ryan. Good morning. Thanks a lot for having me.
All right. Great to have you on as usual. And let's talk about what's playing out right now in terms of the big picture. So we've seen a bit of a slow start to the week and then a bit of a decline. Now we are seeing a bit of a bounce back. What's driving the latest session?
It's a great question. I think that it's pretty well known how well S&P 500 and so many stocks have done, up over 30% in a very short amount of time. So at any point, you're going to expect a pullback. Now, to put this in perspective, we had a very big decline last Friday, and it was only from peak to trough about a 3.5% decline drawdown. But that matches what we saw in May. And as we know, at the end of May, that was bought, and we went up to new all-time highs once more. So I think at some point that pullback is going to be more severe. However, I think that's just part of the ebb and flow of even an uptrend. We've seen that before. We've seen that is how more bullish patterns form, more like foundations. So I think, the longer we can digest, the better it will be for the fourth quarter.
All right. One of the things you're tracking is the breadth of the market. How is that playing out for you right now as we get some of the news flow coming in around tariffs as well as earnings? What's it showing, at least on the front, when it comes to the breadth of the market?
The breadth has been slowing down as well. And again, it's not surprising because there's so many stocks that have gone along for the ride. So 8 of the last 10 sessions, you've seen subpar internal numbers for the S&P 500, but it's been able to hang near its highs still. So I think it shows underneath the surface, stocks are pulling back and digesting, whereas you see rotation, not only across sectors, but within large cap tech, as we saw just this past few days with Apple finally showing some signs of life.
Yeah, that's about Apple because it's in the news. And in the news, as we see CEO Tim Cook and U.S. President Donald Trump announcing a big deal, a fresh $100 billion investment plan into all things to be made in America. And this, as we saw Donald Trump also announcing a 100% tariff on imports that include semiconductors, but he will exempt companies who are moving production back to the U.S. What are the implications of this announcement? What is it going to mean for companies in the tech space?
Well, I think we see the reaction already where a lot of investors are just waiting for some good news, some new good news out of Apple, considering how many AI innovations have come from the likes of Microsoft and others that have outperformed. And so, most recently we had Apple as a buy idea at CappThesis because of its bullish pattern. It seemed like investors were giving it the benefit of the doubt, just waiting for something like this to occur. And so I think when traders count out Apple is when it really responds. Obviously, the news has helped like this, and I think that can give it some momentum now going forward over the next few weeks.
All right, momentum perhaps as we see Tim Cook navigating the tariff environment seemingly quite well for now. Another piece that's coming through is Walt Disney, earnings coming better than expected with a raised annual profit forecast as well. It looks like the streaming business is doing well, led by growth in the sports side of things. And then I think the theme parks business is also a highlight there. What do you like about Walt Disney's earnings?
Well, I think you nailed it, Ryan. I think they're having to focus on sports, and there's been a shakeup there, with the NFL network and other things, and recently, having ESPN Bet do very well too. So I think because of that, and it's a big company overall, but they have to really rely on their strengths right now. Go back to basics where that is, and ESPN is a driving force there. And again, if I look at this from a chart perspective, it's come off its highs a bit, but now I think just consolidating. And I think it has a good chance to reclaim those highs and hasn't really done much over the last few years, so it has some catching up to do, and I think this may be the engine to drive that.
Okay, I'm trying to take away consumer trends from what I'm seeing with Disney's numbers. The parks division grew 13% when it came to operating income. We saw a rise in visitors spending more as well. Is that reflective of the wider consumer trend where folks are, still okay spending, and of course what's to come as well with the tariff environment, maybe making things a bit more cautious? Is that a big question mark still in terms of maybe where consumer spending is going?
I think when we see more of these companies like Disney report, there's definitely going to be like a litmus test there, meaning that, if you look at the biggest companies that are in the industry, especially with Disney and the parks, that's a marker. I think that is just as important as a take for the economy as economic numbers. You see the same thing when retail sales come out in Walmart, right? People are ultra focused there because they know the majority, how big the company is, how many customers they have. That is a real clear indication of what consumers are thinking, but more importantly, what they're doing with their money.
All right, let's take a look at some of the charts you're tracking closely. And we've been talking about gold for quite some time. It's been outperforming the benchmark for the past few years. Where does it go from here? Is that something you're still quite optimistic about going on?
Yes, gold, I think, is waiting to break out as well. And we've actually seen it within the gold miners first. So the GDX ETF has been breaking out, and now gold still is as well. It's had a very strong run already, but I think what people are maybe down on it right now is because it hasn't made new highs since April, where everything else has. So the stock market's caught up to gold in that perspective. But, again, I'm looking at this from a pure chart perspective. Gold's chart pattern is something I would buy right now, anticipating the breakout, because it just looks like it wants to go higher. And again, it's not really about the people selling gold, it's more about the influx of capital back into stocks because caused the underperformance. And I think there's going to be a time again that capital flows back to gold. And I think it can rally even if the stock market continues to remain buoyant. And we saw that really for the second half of 2024 as an example.
Frank, how much is that driven by rate cut expectations, which are starting to creep up again as we get weak data around the U.S. economy?
I think that's always going to be part of it, Brian. It's always going to be looked at as some sort of safety play. But again, if you look at the history of gold, it can trend for years, decades even. And if you overlay it on the S&P 500, it's going to be, positively correlated with it sometimes, and sometimes negative. But I think if we read too much into it, it's going to cause people maybe to shy away from it, thinking that maybe it has to be an alternative to something. I think it's a good spot for anyone's portfolio, whether personal finances or to themselves. But I think that in terms of a trending asset like this, it's good for diversification purposes, and especially when it's trending like it is.
All right, let's talk about where oil prices are going, because it's in the news as U.S. President Donald Trump talks about how he's unhappy with India buying Russian oil. Talking about oil, prices for oil are now at an 8-week low. What's your takeaways from where things are going for oil?
Oil, it's been a frustrating trade for years now because of so many geopolitical concerns, and you just brought that up, Ryan. This is obviously the one in the news right now. So I think you have to be patient with anything energy-related. Again, if I'm looking at this from a trading vehicle perspective, I look at the OIH ETF a lot, and that's been trending higher, but now it's encountering some resistance from moving average supply and also just a prior breakdown zone. So I think it longer term looks okay, but it makes it difficult when there's so many other opportunities. So trying to make a trade out of something related to oil is opportunity cost at this time until it shows the ability to, again, take advantage of bullish formations, which so far it has yet to do.
All right, the Van Eck Oil Services ETF, year-to-date down over 13%, and of course lots of headlines to drive the sentiment around prices. And we've been in conversation with Frank Cappelleri. He is the founder and president of CappThesis. Frank, as always, thank you so much for all your time and insights.
Thanks a lot, Ryan. Look forward to the next time.
All right, catch you next time. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.